Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. The edgy markets, retail sales weaker, the VIX rising, tensions high, of course, in the Middle East. We're trading all of it with the investment committee this hour. Joining me, Josh Brown, Stephanie Link, Shannon Sakosha, Brian Belsky. We will go to the markets and have a look at where the trade is at noon in the East, and we are modestly red across the boards. Reminded of is that Goldman report of people having like 48 or 49% of their financial assets in equities in the stock market. And if you're 2% from a new high, you're feeling pretty good, I think, through all the trials and tribulations of where we've been already this year. Josh, the Bank of America Global Fund Manager Survey calls sentiment at a Goldilocks bull level. They say the trade war and recession fears have abated. The cash levels have dropped to 4.2%, was 4.8 in April. Maybe there's a little more buy-in to this story, feeling like it's gotten a little better.
The thing to understand about the Global Portfolio Survey is that these are people whose livelihoods depend on them not missing out on massive rallies. So it's okay to have more cash when the President of the United States lifts up a piece of cardboard and says we're going to tariff the rest of the world 100% or whatever the number is on their goods. But once that piece of cardboard comes down and the real numbers start to surface, you can't just sit there and be like, no, actually, I think he was serious, and we're going to wait until the actual tariff news. Once the market figures out, hey, this is not going to be a worst-case scenario. This is not going to wipe out 2 quarters worth of earnings. This is not going to crush the U.S. consumer, which is the most important engine of global growth. Then you have to decide, okay, maybe I don't want to be 70% cash. Maybe I want to be 30% cash, and I'll find some stuff to buy. So that's exactly what's playing out. In the end, global portfolio managers are portfolio managers professionally, and if they sit completely in cash, completely risk off, and the market tells them they're wrong, the clock is ticking. They've got to ratchet up. So I don't look at them as a contrarian signal. I don't worry too much about this. I'm not one of these people who sees other people being bullish and instinctively has this knee-jerk reaction where it's like, well, that's it, time to take profits, everyone else is long. I just don't look at it that way. The way that I look at it, the stocks that matter are delivering. Magnificent Seven stocks are part of the formula that saved this market from a full-blown bear market when they reported earnings in late April and early May. 27.7% growth for that group. That's versus 9.4% growth for the rest of the S&P 500. And most importantly of that group is what NVIDIA did. NVIDIA is 26% of the S&P 500's total return year to date, stock price. And it'll be about 17% of this year's earnings growth. If you understand that the AI story and the U.S. consumer are the only things that matter, you could stop wasting your time reading a lot of other data and focusing on a lot of other reports. And those two things, to Stephanie's point, the consumer is fine and the Mag 7 AI theme is intact. If I told you nothing else, that would be enough to understand why we're on the verge of a new record high.
I mean, Brian, 50% off the April low is NVIDIA. The other Mag 7 stocks aren't quite that big, but they're big. Meta, 37.5% off the April low. Microsoft, 35%. Amazon, Alphabet are 27 and 22 respectively. You know, Apple's been lackluster relative to a lot of other names in this group, but even that stock's up 15% from the April low. Are you poised to believe Roth Capital and say there's plenty of support that the bull trend is indeed underway?
Well, I think the bull trend is underway. We're very lucky to remain bullish through all of this, but I would say that there seems to us on a very short-term basis, you're going to be surprised at this, I think there's a lot of bulls out there. And one of the guideposts that we've been looking for is kind of more company guidance going forward, and guidance is falling off a map still. So we're a little bit worried near term on that. Do I think stocks are higher at year end? Yes. Do I think they're significantly higher a year from now? Yeah. But I think even within the Mag 7, I think you have to be even more stock picking. So like we would be adding to Apple here because we think Apple's going to have a big catch-up trade, and we've maintained our overweight stance in Microsoft and Amazon. So that's what's helped our portfolios April, May, June to significantly outperform.
Steve Leisman joins us now with more, our senior economics reporter. I read one bit of commentary today of this Fed tomorrow saying, quote, they're going to sit back and see what worsens first. the labor market or inflation. And once they see that, then they'll know which way of the mandate they need to react to more.
Yeah, that's a very easy way to think about it, Scott. That's pretty much boiling down what Chair Powell has said. He essentially said, look, we're going to watch which one ends up being further from our mandated level and which one will take longer to get back to that mandated level and address that one. In our CNBC Fed survey today, Scott, which you can read online, we asked people, how does the Fed essentially, I'll boil down the question, which side of the stagflation does the Fed address first, the stag or the inflation? 54% say, you know, it pretty much is going to address the employment side, but that's down from 65. So the market not quite so sure, especially because jobs have held up, and it looks like to the extent that we are going to have a problem, it may end up being the inflation part of it, where most economists are convinced that the impact of the tariffs in the CPI are yet to come.
Let me just ask you a simple question. I mean, do you think, if not for the president's trade war and the tariffs, that the Fed would be cutting tomorrow?
No doubt in my mind. These nice inflation reports we've had do clear the way for the Fed to take off a little bit more, maybe a quarter, maybe a half, considering that half to be the restrictive part of policy here. And I think it's important, Scott. I think the Fed still wants to take that half point of restrictiveness off of the top line. It just does not want to be cutting into either a temporary or, worse yet, permanent rise in the inflation rate, or more broad rise in the inflation rate that could be caused by tariffs. Talking to some CFOs this morning, as we do in our normal Fed Day call, Scott, what we hear is that people are charging what they call the weighted average price, or some are anyway, which is, you know, you don't take the tariffed good and immediately raise all prices to that because you have an inventory of stuff. What we saw in retail sales was interesting this morning. It's kind of like the end of the front-running sale that was out there for the consumer. They spent a lot of time and money front-running the tariffs, and now things came off in May. Doesn't mean the consumer's giving it up. It's just likely not as strong as they were before. And then come the summer, they'll likely confront higher prices. Evidence from the import prices is that we are not getting discounts, essentially. So those tariffs are being passed on to U.S. importers. Whether they make their way down to the consumer, that's going to be a matter of time.
Right. It's a tax on somebody. I mean, whether it gets to the consumer level is the great question. Respondents in your survey also predict 2 rate cuts, equal with what the market is hoping happens. I want to read you something that David Rosenberg said on social media regarding the outlook from the Fed and why he views it being so flawed. I have some advice for the Fed. He wrote, ditch the dots. In fact, do what many CEOs have been doing in general and pull out of the guidance. In the context of the supremely high level of economic uncertainty, any numbers this group publishes, will be completely meaningless. That sounds like kind of a reasonable perspective from him, because how could they possibly have an idea of the outlook when the CEOs of this great country don't?
I think the trouble is you get into a consistency issue here, Scott. I think there are sort of, I guess I call them procedural problems with the Fed saying, oh, now we're not going to do dots. And I would remind you of the history here, because we're a little spoiled by even having the dots. The dots were what everyone wanted. Back 10 or 15 years ago, before they started publishing them, we were like, okay, tell us where you think policy is going. It really is a luxury. You can criticize them. They can be wrong. But just like doing a survey, Scott, the survey numbers don't mean that they'll be right in the future. They are a 100% correct average of where people think they're going now. It is the current view that is what's informing us about where things are going, and it's accurate in that regard. So the dots tell us where the average or the median Fed officials believe things are going right now, and that is actually an input. And David Rosenberg, in his very commentary, gives the solution to the problem, which is that if there's all this uncertainty, and the Fed chair and other Fed officials characterize it as that, we'll take them with the massive grain of salt that's implied.
I was gonna literally say those words right after you mentioned Rosenberg again. Steve, thanks. We'll see you down in D.C. obviously. Yeah. Out of Washington, Megan, what do we know?
Hey, Scott, we have just gotten a series of posts from the president about Iran, giving us a little bit more insight into his latest thinking on how to proceed in this conflict. The president posting just in the last few moments on Truth Social that we know exactly, he says, where the so-called supreme leader is hiding. He is an easy target, but it is safe there. We are not going to take him out, kill, at least not for now. But we don't want missiles shot at civilians or American soldiers. Our patience is wearing thin. Thank you for your attention. He went on in a second post to post unconditional surrender in all caps. Scott, both of those coming just a few minutes after he had earlier said something along similar lines, saying that we now have complete and total control of the skies over Iran, that Iran had good sky trackers and other defensive equipment and plenty of it, but it didn't compare to American-made, conceived and manufactured stuff. Nobody does it better, he said, than the good old USA. A couple of things to notice in that post, the foremost one being in all of those posts, the use of we. The biggest question today, Scott, has been whether and just how far the U.S. might be willing to go to help the Israelis in this conflict, whether they were willing to wade in to more fully support those attacks against the Iranians. Using we in both of these posts, raising a lot more questions about the U.S.'s involvement here. In the initial post, talking about the use of American military equipment, he had already praised the Israelis late last week for doing that, so not as much new there. But a lot going on in both of these, saying now that we assume, presumably both the U.S. and Israel now know exactly where the Iranian supreme leader is hiding. Scott?
It's still pretty extraordinary when you just consider it in total that, you know, conducting this level of foreign policy by social media post. I mean, especially when you're talking about the leader of another nation, friend or foe. That's not even my point. It's more so conducting this wide out in the open on social media.
Absolutely a huge question there about what's the point of telegraphing it. Is this to give Iran a heads up? Why would he want to give them a heads up about what is coming? Is it more about making the threats publicly so that they viewed them as a message and started to respond accordingly? Is this all about getting the Iranians to the negotiating table? We just don't know that yet. What we do know is that this is a huge break from what we normally see in U.S. foreign policy, which is operated much more closely behind closed doors. We expect, Scott, that the president is in the Situation Room, will be later today, holding a meeting with his national security team. These posts may be coming before that meeting. We don't know the timing exactly, but a huge, huge question as to why so much of this, as you say, is playing out in the open.
Yeah, he let everybody know about that meeting as well. Megan, thanks for keeping us up to date. Got a lot of stocks on the move today that the committee needs to discuss, starting with Live Nation. Targets a 162 from 157, reiterated by Josh at Goldman Sachs.
Yeah, this is part of my forever portfolio. Michael Rapino has really done an incredible job threading this needle. You've got a really strong consumer that wants live entertainment. They're willing to pay up for it. But then you've also got all these issues with bots buying the tickets, crashing the sites. You've got stuff going on in Congress about how strong this company is. And he is just persevering, and you see that in the result. This thing has just been rallying for 3 years straight. I don't know what other superlative to attach to it. Great company, even better stock.
Brian, Nike. Target cut to 61 from 70, reiterated equal at Morgan Stanley. You own the stock. Your verbal reaction to the name sort of tells the whole story, other than why are you still in it?
Well, we bought it around $56, and we bought it in our value portfolio. A big part of a value discipline, quite frankly, is to be contrarian, to think differently. I think from an operational perspective, they have a lot of work ahead of them, so that's why I bought it. So we'll see how long it lasts.
UNH cutting commissions on some Medicare Advantage plans, according to a report. Steph, you own the stock.
Yeah, it's not surprising. Medicare Advantage is what got them in trouble in the first place. So it's going to be volatile until we get guidance. We are going to get guidance, by the way, in next month. I think if you assume a 1% Medicare Advantage margin, that gets you $20 a share this year. And I think you can actually see expansion next year, small, and that gets you to $25 in earnings power, and that makes the stock at 13 times earnings. And I think it's just too cheap for the #1 player in the industry.
Let's go to Spotify. Yes. Because the target goes to a street high of $900 today. From the prior $800, it is reiterated a buy at Pivotal. Record high today as well for that stock. Guys, maybe we want to show like a longer thing. Yeah, that tells a good story there. Belsky?
Oh, I love this company. I love this company. I used to own it in my mid cap, and then it graduated to my large cap. I've owned it for 7 years. Who would have ever thought I'd like a company better than Apple on a particular product? Spotify's got a better music product, better everything. I think this is a fantastic company, and because it's not listed in the U.S. and it's not in the index, you can actually increase your tracking area in your portfolio, and that's why we like names like this.
Yeah, 60+% year to date. Up next, an update to Josh's best stocks in the market. We are back with an update to Josh's best stocks in the market. I'll send it to you for that. What do you want to talk about?
I think, obviously, the thing that we have to talk about is the defense sector. We've got a bunch of these names on the best stocks list. We've been talking about them. And last week, of course, they broke out on the heels of the conflagration in the Middle East getting hotter. We talked about Axon, and we talked about RTX on May 19th. From that date, RTX is up about 8.5%. Axon's up 5%. Both stocks were breakouts in progress, and they have broken out. So that's the update I wanted to give people. In the column at CNBC Pro, I'm talking about moving up stops and what to do when you've got a winning trade on your hands, depending on whether you're a trader or you're a little bit of a longer-term investor. But those rallies are significantly greater than the Qs, which are up 2% in that time. SPY is up about 1%. I think it's important to just acknowledge the fact that the market sniffs these things out before they happen in many cases. The median return, Judge, for an aerospace and defense sector stock year to date is 17%. The median year to date return for every other stock in the S&P 500 is just 0.7%, not even 1%. Every single aerospace and defense stock is above its 50-day moving average, and only 2 of them are below their 200-day, meaning not yet rallying. Those would be TXT and LMT, Lockheed. So when you're looking for, like, where is the strength in the market, what stocks am I supposed to be in, this is a really smart way, I think, to just say, okay, I'm not going to be ahead of the curve on everything. What is the market already figuring out? These are just two examples of many where the market has already figured out things are heating up in some of these conflicts, orders are coming in, and these stocks are going to work. And lo and behold, something happens, a catalyst, you get that breakout, and now you're playing with the house's money.
Belsky, you own Lockheed, you own Northrop Grumman and Honeywell, so you believe in the aerospace and defense trade?
We do. We look at these as the OG defense contractors. Plus, we're aligned obviously with Josh, but I think you also have to think about cybersecurity along with defense contractors. But these companies are amazing because of the cash flow and the dividends and the consistent earnings, guaranteed revenue from the U.S. government. So that's why we've owned them for a long time.
Welcome back. Oil up again today after that decline yesterday. So 73.80 is where it currently is. Energy is the best sector today and the top performing sector this month. You're probably not surprised by that. Josh Brown, you looked at some of these stocks in your best stocks in the market. You do have 4. EQT, 52-week high today. Expand Energy. Talk to Belsky about that in a minute because he owns it. Kinder Morgan and the Williams companies.
Yeah, so Kinder Morgan and the Williams companies, let's start with those. Those are lower beta. These are midstream firms. They're not as sensitive to the price of crude, and they're really more pass-through of income vehicles. The ones that are sensitive to the price of crude that are on my best stocks list, EQT is up 27% year to date. Expand EXE is up 19%. Doesn't sound crazy until you consider the rest of the sector is flat to down. So these are the best stocks in the market in the oil segment. They've both obviously reacted well to the fact that WTI crude entered the month of June at $60 a barrel. It's up substantially from that level, remaining elevated. I have no edge on geopolitics. I don't know if we're doing a bunker buster or if Iran's going to surrender, or I have no idea. I'm just telling you, most of the stocks are not in my best stocks list, but I think the longer we see WTI crude in the 70s, the more of those stocks start to join the list because you'll see buyers come into them looking for opportunity. So I would be very alert in the oil names right now for the next leg of this rally.
Josh Brown, your final trade is what?
Oh, so I'm just changing mine now. I actually want to lead with IEO. These are the energy stocks that I think have the best potential to break out from here. The whole space, it's ready to go.
All right, so CrowdStrike's the substitution. You get
yeah, that's working, but yeah.
All right, Belsky.
Southern Company, SO, play on traditional utilities.
Southern Comfort, is that what you said?
Southern Company.
Oh,
well,
company.
I mean, I could use some Southern Comfort, let's be honest.
I thought you had SoCo on the brain. So, Shan?
Materials benefit from inflation, but also an inflection higher in economic and industrial activity.
All right, Steph.
Uber, it's down 10%, industry leader, dominant market share.
All right, we're going to watch this market, see if we can get out of the red. Dow's down about 140 as it looks. There's the S&P about 0.5%. The exchange begins.
And welcome to Closing Bell. I'm Mike Santoli in for Scott Wapner. We are live from Post 9 at the New York Stock Exchange. This make or break hour begins with stocks near their lows of the day as investors grow apprehensive, anticipating further Mideast hostilities one day ahead of what could be a consequential Fed decision and outlook. The S&P 500 sliding in the past 90 minutes or so as President Trump reportedly considers having the U.S. take a more active role in the Mideast conflict, with the index sitting just a touch above Friday's low. That was set during the initial reaction to Israel's attack on Iran. You see the S&P down 0.75% right now. Let's get the latest on where things stand from Eamon Javers. Obviously, Eamon, a lot of threads to pull together here.
Yeah, hey there, Mike. President Trump was back at the White House as we got word earlier this hour of loud explosions in Tehran and reports from the Israeli military that there might be Iranian missiles heading toward Iran. Today, the president has been stepping up his rhetoric against Iran on social media. In a post this afternoon, he wrote, "We know exactly where the so-called supreme leader is hiding. He's an easy target, but is safe there. We are not going to take him out, kill, at least not for now, but we don't want missiles shot at civilians or American soldiers. Our patience is wearing thin." So that leaves open the question, Mike, of whether Trump, who campaigned on the idea of ending wars and who has sought to position himself as a peacemaker, is considering bringing the United States into the war against Iran alongside Israel. In another social media post, the president wrote, "We now have complete and total control over the skies of Iran." The president doesn't say in that post who exactly he means by we and whether this refers to U.S. military assets over Tehran or separate Israeli action. Either way, the president is in the Situation Room with his top advisors at this hour. We don't know if we're going to see him on camera for the rest of the day today, so we'll keep an eye out on social media, Mike, to see what else the president has to say.
And I guess, Eamon, we don't quite know the range of options that the administration, that the cabinet might be considering right here. We don't really know if Israel's going to kind of go ahead with a plan and maybe the U.S. follows along. I mean, I guess despite the fact that we have this unusual real-time posting of the president's thinking on these matters, we don't necessarily know what's being thought about.
Yeah, we don't know what's on the table here, Mike. And obviously, the options for U.S. involvement here would range anything from intelligence sharing and support aircraft and equipment all the way up to full U.S. military participation and potentially boots on the ground, right? That's the scale of the range here. What the president will ultimately decide to do, if anything, we don't know. It's interesting because, sort of the MAGA Republican appeal to American voters was in large part this idea that this was a president who was going to campaign to get the United States out of so-called forever wars in the Middle East, not launch new ones. So, excuse me while I kill that. That's the question here. What direction is the president going to decide? What does he think is important for his political future and for the region and for the United States more broadly, of course?
Yeah, obviously kind of potentially brings up lots of other questions and frictions. And, never send a source to voicemail, Eamon, so get back to the phone.
That's right.
We'll catch up with you a little bit later.
Hey, everybody. Welcome to Blue Cloud Trading. My name is George. It is Tuesday, June 17th. Markets closed. We just saw some clips from CNBC, Josh Brown and guests. There's a lot of turmoil happening in the world right now. And here are the indices, how they closed at the end of the day. The Dow was down 0.7%. NASDAQ was down 0.91%. S&P 500 down 0.84%, and the Russell 2000 was down 1.05%. Now, if we take a look here, we're going to go through about 15 stocks that were talked about on the show, including the final trades that that we just saw from the guests on the halftime report. So we're going to look at those specific stocks. We're going to use the Ichimoku indicator here, and we're going to try to assess how they look technically, if they make sense. And also the indices here. We'll also take a look some of the Mag 7 stocks, the strongest sectors, and one of our members' requests, SEZL. So let's take a look at the heat map first. This showcases what stocks in the S&P 500 were down today, and it was really the majority of them were the healthcare sector, as you can see here. Tesla was down 3.88. You know, a lot of the financial stocks were down. Energy was the clear winner here. Palo Alto, I'm sorry, not Palo Alto. Palo Alto, PANW. I thought that was the correct ticker symbol. After a while, you start memorizing all of these, of course. CrowdStrike. Palantir was down 2.27. Let's look at the sectors. How did they perform? Well, they were all down except for energy, and that can be expected when you start seeing a little bit of chaos in the markets and the geopolitical issues that we're experiencing right now. So how do we deal with that? Well, in my portfolio, I did recommend. Well, I didn't recommend. I basically just share my trades, and one of the ways that I do that is by hedging. And so one of the things I share with members is the SQQQ ETF, which, by the way, if we look here under the ETFs, exchange traded funds, you can see those were actually up today, right? And here they are right there. And if we look at how the SQQQ rate is performing right now, let's take a look at that. Actually, we can look at that here. I'll just throw that on the chart. So this was the closing price right here. Through the magic of this little button that I have up here, I can include post data that includes trading that's happening after 4 p.m., after the close. So let's go ahead and click on that. So remember, it's up 2.98% at 4 p.m. What's it at right now? Whoops. It's up 3.85%. So, this is not good for the market overall, but it's a way to hedge your positions. Now, let's start off with the S&P 500 and see how that is looking, and throw on some trend lines here so we can get a sense of where we are in relation to the past. And you'll notice that the S&P 500 today dropped back under the Tenkan-sen. It was under on Friday. It popped back on yesterday, and now it's back down again, of course. So we're also seeing a crossover here. The negative DI has crossed above the positive DI. That's a negative situation. So that could turn into something a little bit more. We might see a continuation, essentially, is what I'm saying. If we look at the post, this is the post market right now. This is where prices closed. It closed at 0.85, so it's down more after hours. How about the Qs? Also closed at down 0.98%, not looking that great. I mean, it's kind of stalling, right? The market has been stalling, as I've said many times, in this little range. There's a lot of, I suppose, hesitancy, right? No one's really going to be jumping in this market with all the negative news that are happening. I think what's happening right now is a wait and see approach to see how bad things get. And if they get pretty bad, guess what? The market will drop eventually. We have been desensitized over time to bad news, and the markets have been desensitized. And so even as we get negative news regarding what's going on in the world, you can see prices still continue to move up, right? But they're not moving at the same rate as they were. And now they're starting to stall. And now there's a lot more. I think what's happening is that people are starting to question, can we break through these levels? What is the catalyst that's going to lead to that, right? Let's look at FEZ. FEZ, the Euro stocks, also dropped today. In fact, this one dropped 1.64%. Got under the Kijun-sen, and you can see the negative DI. It's a little bit more pronounced now here, with it crossing above the positive DI and moving straight up. That's a negative right there. Now, the good news is the ADX hasn't started to move up yet. That represents the momentum. So as long as it's declining, this might be short-lived. Maybe it will come down to the 57.67 support level and then bounce. But right now, I would not be adding positions here, obviously, in any of these ETFs. Dow Jones, same thing. The DIA ETF, it's stalling right at the Kijinsen. We've got a negative DI above positive DI. Russell 2000, under the moving out, under the Tenkinson, same situation here on the daily. And the VIX spiked a little bit, 13.3%, 13.03%. That represents volatility and fear in the markets. And it actually closed above the Kijinsen. All right, the last time it was above the Kijinsen was back here on April 11th. That's the red line. Now, the red line is the Kijinsen. That's the 26 period. Essentially takes the last 26 periods, the midpoint, and then it projects it right there. The green line is the 9 period, called the Tenkinsen. And we've got the Ichimoku cloud. And that yellow dotted line is the 200 moving average. So we are above the 200-day on the VIX on the daily, and we're at a level of 21.6. It's not good when this is moving up for the market. Let's take a look at the stocks that they talked about on the show next now. LYV, Live Nation, one of Josh Brown's favorite stocks that he likes to bring up on the show. This one actually did break through that little trend line there. You can see that. It's like almost like a symmetrical triangle. And so that's very bullish for LYV here on the daily. How about the weekly chart? Weekly chart still looks pretty good. I mean, it's kind of stuck for the multiple weeks now in this little range for about 6 weeks. You know, so it's not like it's really taking off. But this is a nice little pop up here. Spotify is still moving up. Up 0.80%. I've got all these highlighted. These are the strongest ones that were discussed. Out of the 15, it was just these 7 stocks, right? That look strong on both the weekly chart and the daily. That's the prerequisite for me to actually throw that little blue flag that you see right there onto these. So, Spotify, I like it. On the daily, it looks pretty good on the weekly too. Right, there it is in the weekly. That was Joe Terranova's final trade back on February 12th and April 15th. They talked about it a little bit today too. Axon. Now this is actually a stock that I actually hold in my portfolio, and I added this one on June 5th. Currently, it's still flat. It hasn't really moved much, but we'll see what happens with this one. It's in the industrial sector, aerospace and defense. I think that's a pretty safe sector and industry to be in currently in this environment. RTX is another one also. That falls in that same category. This is another stock that I have in my portfolio that I share with members. I'm just bringing it up since they brought it up on the show. This one I'm holding. It's up over 9%. I added that one back on May 19th. ITA, this is an ETF for the aerospace and defense. As you can see, it's been moving up steadily for a long time now. It's kind of stalling a little bit. It is stalling a little bit right here. But I think it's more likely to pop again, just based on what's happening, EQT, energy sector, oil and gas is obviously very strong right now. In these last 4 days, it's been popping. It actually jumped through these prior highs here yesterday on Monday, and here we are on Tuesday. So ADX is moving up. That means the momentum is increasing. The volume was increasing right there. It looks good. And EXE also looks pretty good. That's in the oil and gas as well. I'm not a big fan of this one as much because it does have a negative profit margin still of 18.49%. Their sales growth is a little bit slower than EQT, for example, right? So if fundamentals are important to you, you might want to, if I had to choose, I would go with the EQT versus EXE. All right, let's look at some of these other stocks that are not so great, like Nike. And this one's been in a decline for a long time. Let's look at the weekly chart. Actually, let's look at the monthly, folks. I've actually talked about this a few times already. Bryn Talkington bought this back on April 4th. Brian Belsky still holds a position in this one. I mean, again, technicals help to identify whether or not you should be adding, and it hasn't made sense to be in this stock since this candle right here, which is back on January 31st of 2022. In fact, it's dropped about 59.27%. All right, so you can see how the technicals and the Ichimoku indicator can help you stay out of trades that don't make sense. Now, what happens is a lot of people start thinking, oh, it's getting cheaper. It's getting cheaper. it's a lot more attractive at this rate. You know, this like the price to earnings growth is only 1.18. Price of sales has come down, and there's all these other things, and it's gotten cheaper. But how do you know that this is where things turn around? You don't. It could get a lot more cheaper. It can come down to $20. All right, you can see this price coming down another, I don't know, 50%. I'm just saying, it's in a downward trend, and it's impossible to identify when this thing is going to stall or slow down. I'd wait for some technicals to start to give you some insights here. On the monthly chart, we certainly don't. We're not even above the 9 period, and on the weekly chart, we're under the Kijinsen. You can see how it's held it for the most part. The majority of the time, as it's been dropping year after year after year under the cloud here on the weekly. And then here's the daily chart. And then you get these little occasional pop-ups, but the 200-day moving average is still in a downward slope on the daily chart. Price is under it. Nothing good happens when price is under the 200. UNH, Stephanie Link, still touting this this stock that has dropped on the monthly chart. Let's look at this monthly. Does that look like a pretty chart to you? It's fallen apart. It dropped back here on December 31st, 2024, about 38.7%. Is it stalling? Maybe. Let's look at the weekly chart. Okay, so you can see here, yeah, these last few, what is it, 1, 2, 3, 4, 5 weeks now, it's kind of just moving up, but it's right below resistance levels, like the 9 period and the 26 and the 200 on the weekly. And if we look at the daily chart, it's not better, any better. So now is not the time to be jumping into the UNH. All right, let's take a look at KMI, Kinder Morgan, also dropping. It's under the moving averages here on the daily. Stay out of that one. WMB, Williams Companies, oil and gas on the daily chart is dropping. You'd think that this would be doing well. It's actually down 1.10%. IEO, this was Josh Brown's final trade. This is the U.S. Oil and Gas Exploration and Production Index Fund, ETF. Now, on the daily chart, it does look very bullish. You can see that the ADX is moving up. Price popped for the last 3 days now above the 200-day. However, with that said, if you look at the weekly on this ETF, it's still right under the cloud. In fact, many times when price comes to the cloud, it will find resistance there and drop. It did right here at the top of the cloud, and it dropped. Over here, it dropped. Right here, okay? And so it's retesting right now. So we'll see what happens with IEO, but it's still technically in a downward trend. Here's a monthly chart. The monthly looks more bullish because it looks like it's bounced right here. So we might be getting a turnaround here. But the weekly still needs to prove itself, basically. SO, Southern Company, this is a utility sector. This was Brian Belsky's final trade today. And on the weekly chart, it's okay. Price is above the moving averages, but it's kind of just pulling back after that, hitting that 93.41 level that you see right there. How about the daily chart? Under the cloud, above the 200. It's kind of like, it's basically, you know, at a stalemate right here. I would not be jumping into this. It's kind of consolidating still. IYM is the materials. That's under the 200 right now, pulling under the Tengen-sen. That was Shannon's final trade on the daily, and on the weekly chart, it's still under the 200. It's more than likely to pull back further. So I'd stay out of that one. The reason I like to look at both time frames is because I want to get a general context of the longer term chart. It helps me to assess whether it's, you know, going into next week, where do I think IYM is going to be going? I think it's more likely to drop. All right, guys, I can only, you know, look at these candles, get some idea based on the candlestick patterns, right? And if I see a negative candle like this on a weekly chart that's forming, it's telling me, yeah, there's a higher likelihood that it's going to drop next week. Doesn't mean it's going to, just a higher likelihood, because it's showing that the sellers are in control and they're pushing the price further down, and the buyers are just not stepping in to push the price further up. And we're getting these reversal candles. That, like that candle right there last week was a oh man, why is it's not coming to me right now? The gravestone doji, okay? Because it looks like a gravestone. It's like flat. You get the little line right there. And this is a bearish engulfing kind of pattern that's forming here. What about Uber? This was Stephanie Link's final trade. Now on the weekly chart, it's been declining, for the last, 5 weeks or so. But on the daily chart, but overall, it's still above in a strong uptrend. We do, in fact, have a higher high here from the prior one and a higher low from that low. All right, so it's pulling back. This might be a bull flag that's forming on the weekly chart. And if you look at it on the daily, you can see that I've talked about this many times. There's the flag, okay? So if it can break through that 87 level and get above that Kijunsen, I think there's a good possibility that Uber will continue its move up. But right now, it's not the time to be jumping in, is what I'm saying. That's all. And let's see, what else? Let's take a look at the Mag 7, the ones that are not in my portfolio. I wonder if you can guess which one that is. NVIDIA. Okay, so NVIDIA is down 0.39% today. Again, just kind of stuck, right? Price is not moving. Look at this. Very tight range, too. Like ultra tight range. So I'd wait. I would not be jumping in here. Obviously, Google pulling back here a little bit under the 176.77 level. On the weekly chart, we're still inside the cloud. No on that one. Tesla is also inside the cloud and under the 26 period moving average. On the daily chart, it looks like it's kind of formed that, I don't know. Let's see. Yeah, I think I'm going to have to revise this because it did pull back down further. So let's delete that. And let's create a new one here. Okay. So it is pulling down further. Maybe it's developing a flag. I don't like this one. This one seems not as bullish to me, honestly. Because if you look at that, I don't know. I just don't see that. I don't know. Plus, I'm not a big fan of the Tesla stock right now based on the fundamentals of the company. They haven't been coming out with good earnings recently and all the political issues that are happening there. Amazon on the weekly chart is above the moving averages and the cloud, but the faster moving average is under the red line on the weekly, and on the daily chart, it does look more bullish. All right, so, there's something here. And now I personally would wait a little longer just to see if it can break through that prior high. What is that high? The high is 218.40 because it did stall at that level and it pulled back, right? You can see it pulled right back down and now it's finding resistance right there. So let's see what happens there. And then Apple, I'm not a big fan of Apple right now. Obviously, it's been pulling down. Let me just get rid of all these lines so you can see better. Just the Ichimoku. It's under the Tenkan and under the Kijunsen and under the cloud, but still technically above the 200. And last time it came to the 200, it bounced. So the 200 is holding it in place, I think. And it could drop another 7.6% and then find a bounce right there. Right now, I would not be adding a position here, obviously. It's just in a downward trend. Meta, on the other hand, has been moving up steadily. Down 0.7% today, but it's still holding above the Tenkan and Kijunsen on the daily. And on the weekly chart, it's just not a very strong chart here. It's just not a strong uptrend anymore because we've got the negative crossover that took place between the green line and the red line. The faster moving average is under the slower one. That's generally not bullish. And we have not taken out this high right here. So, all right. And what about the sectors? Let's take a look at those. Let's look at the daily charts on these. By the way, I'm going to introduce this new one to you guys. And I'm going to do this because, you know what? Let me tell you a little bit about PDBC here. I thought I had a note. Yes, I do have a note. Where is the note? It's right there. Now this one, what is this? It's the Invesco Optimum Yield Diversified Commodity Strategy No K1 ETF. I'm going to talk about that in a second. One of our members brought this to my attention, and he's got a point. I think it's a good idea to try to avoid ETFs that require a K1 document because it does become a hassle. All right, I'll talk to you about that in a second. But PDBC, it's basically an actively managed ETF that tracks a broad commodity index, including natural gas, oil, metals, and agriculture. It takes all those things. It uses a Cayman Islands subsidiary to avoid the K1 forms, issuing a Form 1099 instead, with a 0.59% expense ratio and high liquidity, about 4.7 million shares traded per day. Today was 5.2 million. Now, what's interesting about this one, technically, you'll see here on the weekly chart, it is popping above the Ichimoku cloud for the first time since this little candle on July 5th of 2024. All right, now it did pull right back under. It was a very short-lived little pop-up, and it didn't last, okay? This might be different. This might be different. We'll see if I'm correct. I think I'm a little bit more bullish on this, honestly, this time around. But you know what? We have to wait and see, right? It's a wait and see approach. But I certainly like what I'm seeing here. You can see the momentum that's coming into this right here. It popped above the 200 for 3 days now, and it's broken this prior high right here of 1305. We've got a higher low here from this low. All right, and so yeah, I think that there's a possibility here. There's a hammer at the bottom of that move. Those tend to be very bullish candles that can lead to an uptrend. All right. And why is it that I don't like K1 forms? Well, ETFs requiring a K1 form are structured as partnerships, passing through complex income and expense details to investors, which can delay tax filings. K1s often arrive in March and increase preparation complexity compared to the simpler Form 1099s. Now, popular ETFs with K1s include the United States Natural Gas UNG, United States Oil Fund USO, and you can look these up. Before you buy an ETF, it probably makes sense to take a look. I mean, try to minimize buying those types of ETFs if you can. If you feel like you're gonna have some issues with the tax, doing taxes on your own, if you don't have a tax accountant, okay? All right, let's see. What else, folks? What else can we talk about? So let's get into some of these other ETFs. COPX is Global X Copper Miners ETF. And this one does not require K1, just so you know. Now, on the weekly chart, it's still stuck inside the Ichimoku cloud. On the daily chart, whoops, it crossed back under the Tenkan-sen. So it's not a good time to be adding here yet, but I think that there's a potential here for this thing to pop back above soon. We'll see if I'm correct. GDX, it still looks pretty strong. That's the gold miners ETF. There's the daily. It was down just 0.07% today. Let's see what it looks like after hours. It's up. See, not surprised by that. What about the industrials, XLI? In between Tenkan and Kijinsen, nothing to do really, but it looks pretty strong overall. XLK, same thing. Just stalling here. XLK is probably down more after hours. Let's look at it's down 0.71 at close. What about now? Down 1.02. All right. So tomorrow morning, markets should be down again. Bitcoin, US dollar, is at 104,635. That also dropped a little bit into the moving averages there. Risk is off right now. XLC, communication services, that's down 0.88%. Utilities is down 0.83. These are some of the strongest ones, though, still, technically. IBIT, the Bitcoin ETF, pulling back a little bit. There's a bull flag type situation going on right there. SMH, still moving up strongly, the semiconductors. But these last, I'd say, I don't know, 5 or 6 days now, it's been stalling. Gold, holding up above that trend line. Did not break back under. That's good. Up 0.05, and I bet it's up more now. Let's see. Yep, up 0.13. Not that much, but a little bit. And the rest of these are not looking particularly good. Now, here's another new one that I'm going to start watching a little closer. By the way, another ETF that does not require, notice how it says ProShares K-1 free. So I always like looking up some ETFs to make this a little easier. And the only problem with this oil K versus, for example, using, I don't know, something like USO, look at the average volume here is 145,000. Okay, but it is an ETF, all right? So It is diversified, but I'm just saying, it's not as doesn't have the same liquidity as, say, the USO, which has 26.2 million shares, but requires a K1 form. Okay. Anyway, let's so this one obviously is taking off here on the daily chart. Here's the weekly chart. It's still inside the cloud right now. All right, it's still under the 200, but it's strengthening, and it was up 3.33%. And if we look at post market, it's up a little more, up 3.42. And that's all I'm going to cover today. All right, actually, let's look at XLE, because I haven't really covered this one for a little while. That was also up 0.93% today, but it's still under the cloud on the weekly and on the daily. Now, on the weekly members only video that I cover, where I go over the sectors, I'm not using these specific ETFs. I'm using something called, there's a drill down. Okay. So TC2000, the software that I use, goes a little bit more in depth. So if I click on basic materials, instead of XLB, you'll see SX10, right? What's the difference? Well, these sectors have a lot more stocks within them, right? So there's see it down here, it says 325 items in the watch list. Okay, that's the stocks that you see here. There are 325 in here. Okay, so that's a much bigger, more vast group of stocks than the XLB, which only has approximately 28. So if you want to get a real good sense about the number, like what's really happening with the sectors, you should watch my members only video, because I go into these specifically. And this is going to be a more accurate assessment of the sectors that I do once a week in the members only video. There's basic materials. Now, if we look at energy, for example, if you look at the weekly chart here, it is bullish. Okay, because again, we're looking at 249 stocks versus XLE, which only has, let's see here, 21 items. It's just 21. All right, so that's it. It's not going to give you an overall assessment of the sector at the same level. That's all. And then I kind of go through the industries within the sectors, find specific stocks that are looking pretty strong within each industry. All right, and then I analyze those specific stocks and share those with members. So consider becoming a member, guys. There's a lot more stuff that I get into in the member only videos, and if you want to access those, it's really easy to do that. For example, all you need to do is come here to Blue Cloud Trading, my homepage. You know what I forgot to do before I do my little advertising thing here? I did forget to talk about the members only request. Hold on. Let me just do that first, and then I'll get into that, okay? SEZL. Sorry about that. I almost forgot. SEZL. Let's look at Sezzle Inc. Now, this is a financial services sector, credit services company. It has been doing pretty well. As you can see here, the chart looks pretty strong. You know what I'd like to do is take a look at Sezzle on the in FinViz too. Let's take a quick look at that. SEZL. There's the earnings. Some nice positive earnings right there. These last quarters, all green. That's positive. Performance year to date is up 237.46%. There are only 408 employees in this company. All right, so that's kind of concerning. It's not a really, but the market cap is $4.79 billion, which is interesting. The sales have been increasing significantly. Sales quarter over quarter, 123.32%. Price to free cash flow looks pretty negative here. Let's take a look at that. Let's go a little further down into the fundamentals here. And we're looking at annual right now. So the net margins have been increasing, so that's good. You can see that progressive move up. That's very positive. And what about the free cash flow? So in order to do that, we go here to cash flow. Click on that. Free cash flow is also up. You can see that big bar right there. So I like the fundamentals. I mean, there's a lot more in the fundamentals here that you can look at. Those are important to me. Those are the key things that I look for when I'm looking at different things. I look at the ratios here as well. But I do like what I'm seeing. I mean, look at this. Performance year to date up 1,035.81%. This is a stock that has done quite well. It went from a 20 $5 or so, up to 143. Okay, this is back in April of this year. So big move. Big move. What's causing all of this? Let's see here. BNLP competition flares, talking about. I want to look at a big percentage jump and see if we can find some information. Oh, look at that one right there. So see that 42.14%? Why Sezzle stock was sizzling today? All right, let's find out. So shares of Sezzle were on fire today as the buy now, pay later BNPL platform delivered strong results in its first quarter and raised its guidance. The quarter is the latest evidence of strong momentum in the business, and the stock was up 51% as of 1:24 p.m. That was back on May 8th this year. Okay. It soars. The fintech company said that gross merchandise volume, GMV, or speed on the platform jumped 64.1%, with customer purchase frequency up to 6.1 times in the quarter from 4.5 in quarter 8 a year ago. All right. What's next for Sezzle? It's clearly gaining market share rapidly in the fragmented BNPL space and has some key differences from other BNPLs, including that it gives users the option to choose whether their data is reported to credit bureaus, meaning it appeals to users who don't want to risk hurting their credit scores. Okay. So you can see how easy it is to try to assess and try to figure out why. Why is the stock moving up that much, right? You can go back into the news section of FinViz and you can look at these big spikes in the percentages and see what causes it, right? What made that jump 42% on May 8th, for example, at 2:29 p.m.? Why did this article come out? And why did this all happen? So yeah, daily looks great, and so does, I'm going to guess, the weekly. Yeah, looks pretty good. There you can see the Chiku span. I'm sorry, the Chiku span. The Senko span A and the Senko span B are going straight up. It's not often that you see that, the way that you see right there. Look at that Chiku span, which is, of course, the closing price. That's a weekly chart you're looking at right there. You know, this company's only been around since 2023 as far as being a public company, back on August 18th of 2023. And, I mean, since its inception there, it's up over, I don't know, what is that? It's up over 3,000%. All right, that's a big move. Because the opening price was, let's see, $3.77, and it's now a $143.87 stock. So if you bought this at the, in the early stages, man, you made some good money. What do the technicals tell us to do now, though? Let's look at the daily chart again. So it's still in a very strong uptrend. You're going to get some of these reversal type candles. You can see them right there. In this scenario here, it's still holding up above Tenkan-sen. It's very close to the Tenkan-sen. I would still be holding here. If you start seeing price dropping under the Tenkan-sen with a big red candle in a bearish engulfing pattern, if you start seeing some of these double candle patterns like bearish engulfing or bearish kicker or dark cloud cover, bearish harami, a red spinning top that occurs after a big move, like a big jump, because the price with Sezzle, it might start to pop even more. And if it gets too far away from the moving averages, that's when you really want to be concerned even more. But I like thank you for bringing this to our attention, because this is a nice one. I just added it. I gave it a star and a flag. It's something that I'll be looking to probably add to my portfolio in the near future. All right. And then you guys can follow along in the members only videos. And again, let me get back to that one more time. How do you do it? Okay. There used to be a join button. YouTube has changed it now. Instead of join, they have a subscribe plus, right? So if you've already subscribed, you'll probably see like a little plus sign right there. You click on that and it pops up this little box. And there are 3 membership profiles here perks. I'm sorry. Membership groups that you can choose from. You can become a Blue Cloud supporter, okay, for $4.99 a month, and you're helping to support the channel. You can request a stock to be analyzed on the show. Blue Cloud Trader, all right, $24.99 a month. That's where you'll start to get access to those member-only videos. The latest one I just did this weekend, over an hour and 20 minutes. If you can handle listening to me for that long, Blue Cloud Legend level is the next level up, the next tier. Under this one here, you'll, in addition to the exclusive member-only video, because you'll get that, you'll also can request up to 3 stocks or ETFs be analyzed. Day trading videos are also have been recorded on there that you can view how I day trade. Daily trade updates is the most important thing. Now, it says here community tab. I tried to edit this and I was unable to. For whatever reason, it just won't change this part. But basically, you'll find the daily trade updates. Okay, they're not posted under the community tab anymore. They used to be. Now they're posted once you become a member. All right, next to posts will be a new tab that will form here. It's called membership. This is what it's going to look like, just like that. So that's where you'll find those daily posts, okay? So click on that and you'll be able to access my daily posts. These are all the member-only videos. You can go back and see how I've been trading, for months now, all right? I mean, this goes back quite a bit, further than 3 months. So anyway, if you guys like the video, don't forget to hit the like and subscribe, and I'll catch you guys all in the next video.